Records are made to be broken. The USDA's January 1st cattle inventory report places the total number of cattle and calves at 87.2 million head, consistent with trade expectations for a nearly 2% decline from a year ago, as the industry continues into a fifth consecutive year of contraction within the cattle cycle. The report mostly confirms anticipated year-over-year declines across all inventory categories, with fewer beef cows than any time since 1961 and the lowest total inventory since 1951. As expected, all cows and heifers that have calved total 37.6 million head, also nearly 2% below last year, reflecting 2% fewer beef cows at 28.2 million head and just a slight drop in dairy cows at 9.4 million head. Similarly, beef replacement heifers are down about 1.5% from a year ago, while dairy replacement heifers are just fractionally lower. Overall, the inventory of all heifers weighing 500 pounds or more is also down about 1.5% compared to expectations for just less than a 1% decline. Bulls and steers weighing over 500 pounds are down less than 0.5% and more than 1.5%, respectively. Only calves under 500 pounds at 2.75% lower really surprised analysts, coming in below the range of pre-report estimates. Lesser but still notable deviations from expectations include bulls over 500 pounds and the same weight other heifers category, which are both down by not quite 0.5% and 2% respectively, placing them near the upper end of pre-report estimates. While some of the other heifers may yet be bred as replacements depending on range and forage development as the year moves onward, a number of these animals are feasibly destined for feedlots. Correspondingly, the nearly 1.5% drop in beef replacement heifers falls within widely ranging pre-report estimates, but is nearly twice as low as the average expectation of just 0.75% lower, supporting continued industry contraction. The calf crop at 33.6 million head, or 2% below the prior year, is, as expected, the lowest since 1940, which should be bullish for feeder calf prices in the near term and fed cattle prices down the line. The USDA reports the January 1st inventory of cattle on feed at 14.4 million head, 11.9 million of which are in feedlots with capacity in excess of 1,000 head, which is about 2% more than a year ago. Last December, these feedlots placed 1.7 million cattle on feed, or about 4% fewer than a year earlier, and marketed 1.73 million, or about 1% less. With steers and heifers on feed up 2.3% and 1.8% respectively, the ratio of heifers to steers is at almost 40%, remaining nearly as high as a year ago compared to around the low to mid-30s during much of the last expansion. This is again evidence that producers have yet to initiate expansion of the brood cow herd. In light of the smaller inventory numbers, beef production is anticipated to be 3.2% lower in 2024 than last year. Lower availability of beef is expected to constrain U.S. per capita consumption to about 56.5 pounds per person in 2024, compared to 58.1 pounds in 2023, or around 2.75% lower. Meanwhile, exports are expected to be 7.6% lower this year, which also reflects lower anticipated beef production and strong beef exports in recent years. Due to relatively strong demand and declining production, cold stocks of beef are already fairly low. While up 6% from the prior month, stocks of beef on December 31st are down 11% from a year ago. All things considered, cattle prices for 2024 will likely surpass last year's records. Feedlot and packing capacity relative to the availability of cattle to place on feed support quarterly forecasts for steady to higher slaughter steer prices, averaging 179.77 a hundredweight, 185.75 a hundredweight, 183.01 a hundredweight, and 196.36 a hundredweight, respectively, for the coming year. Given the especially low calf crop and the greater than expected drop in calves under 500 pounds, feeder prices may see a more immediate boost. Here, 600 to 700 pound feeder steer prices are forecast to average about 269.65 a hundredweight and 268.02 a hundredweight in the first and second quarters, respectively, before rising to 282.57 a hundredweight in the third quarter and tailing off seasonally to 274.22 a hundredweight in the fourth quarter. These forecasts reflect current estimates of low cattle supply and a likely prolonged return to industry expansion compared to the last cycle, as heifer retention has not yet begun nationwide. With the supply side seemingly set for higher prices in the coming year, much of the downside uncertainty hinges on maintaining demand and underlying concerns for the economy, inflation, and interest rates. Hence, if domestic or export demand falter, lower prices may be observed. For the University of Illinois and Western Illinois University, I'm Jason Franken.